Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our funnily named. Oh, looks like. Hello, everyone. YouTube is alive. Yay! Actually, it's gonna probably be a pretty quiet session. I see there's just a few people in the hangout here with me. Who's here? Hey, Bill. Hi, Peter. Hi, WB Merrick. Nice to have you on board. There's a couple people over on YouTube. So, unfortunately, of course, I noticed that my crypto reports of late have been a bit, oh man, not much to get excited about here. And so you can literally see the viewership dropping off. But hey, I got to call them as I see them. So that's just the way this crazy market is. Gotta tell you, man, we're having such a fun time in the biotech stocks. Oh, geez, they're going crazy. So stock market's definitely frothy and upbeat, and of course, check out the sort of Monday to Friday daily brief recap for ideas along those lines. Crypto, it's a bit of a tough slog. So I do see, I've sort of made reference to this recently, coin pickers market. And I really do believe that, and especially starting to hear sort of chatter of final dumps down into levels where the North American miners are going to have trouble, but the Chinese miners are going to do fine, which of course plays right into their hands. And end of year, in a weird sort of way, it's kind of like we're seeing the stock market melt up almost on the exact 1 year anniversary of its meltdown low last year. And I wonder whether, it's interesting how Bitcoin, I suppose we could probably... Actually, this is kind of a fun thing I wanted to do this go around here today. And I don't know whether it's a good idea or not, but what the hell. Since there isn't anybody watching this video, I don't really have to worry about asking questions. This is just going to be, Brian's going to rant for an hour and a half or whatever and tell you what's on his mind. Look at that. We even had somebody leave the hangout here. So Bill and Peter, it's just just the three of us. Just the three of us. There's a couple people over there on YouTube. Hey guys, how you doing? So actually, if you wanted to ask me a question, now's the time when you've got the odds of you winning, getting my attention to ask me a perfectly, blunt question. You've got my attention. But I thought for fun, what we would do is maybe just... I was kind of thinking it would be a good idea, and I know some people have asked me to do this before, but, since it is relatively quiet in the market, maybe what we ought to do is just simply just start with a blank slate and just say, okay, well, if I wanted to, I'm brand new to this whole trading crazy squiggly line idea thinking, how do I approach... just getting going. So, we'll use TradingView here as a charting platform. I haven't found too many that are really too competitive to TradingView yet. There was a couple charting sites that I was using. There was one charting and whole sort of platform software I was using for years. I loved it. Then one of the banks went and bought them out, and now they're like a total paid-for service. So you can download them, their trial software, and I think they let you track up to about 20 symbols, but you can really feel the shill come in once that trial period's over. One thing I do like about TradingView is they give you relatively a good functionality, even with a basic site membership. And they do have some tools that I find actually pretty difficult to find across the web, things like volume profile, and the ability to build and customize scripts. In fact, actually, one of the gentlemen who's in the call with me here today, he's really taken advantage of that scripting language big time. And it's beautiful to watch these computer programmers go to work. The magic that they can produce is remarkable. But for the purposes of our conversation here, we can simply use the most basic chart, and I think you get all this stuff for free on TradingView. So there's your chart. You type in your symbol. I like to use stamp Bitcoin if I'm looking at Bitcoin. We can look at anything if you want. If somebody's like, no, I want to, oh yeah. Wait, so yeah, and it's a slow market when Colleen's not even on the call, because I mean, she's a soldier and she's here almost always. Oh, I do see Jonas is here from LA, so that's kind of cool to see. He's a soldier too. That guy's pretty, just incredible. If Colleen isn't here, it's a slow day. But anyway, I did see her on the website though this morning, so totally awesome. Hey, Roger. Hi, Joshua. I wasn't gonna say it. I just said, but and actually, it's funny how, I don't know whether you know, Jonas, but they've got it. That now the commercial is that they actually have a guy who's imitating you. I don't know whether you've seen that, but he has a horrible Western accent. It's just priceless. I thought that was a funny bent on the recent angle they went. I won't say the name. Read the chat if you want the direct reference. Anyway, so here's your chart. Gee whiz, this crazy Bitcoin thing. Should I be investing it? Should I be trading it? How do I even approach this? Because Bitcoin, I firmly believe now Bitcoin is a commodity, and it could very easily become sort of a integral part of the world financial services industry. I think that you can do all sorts of fundamental valuations, and we have some fantastic analysis done by some of our site members on cost of production modeling on various different mining equipment. And I think I made reference to that in last week's video or the previous one. So go check out those Broiler Chickens shows. Shane's done just a fantastic job. Again, with the incredible genius of scripting on TradingView here. So one of the things I do like about Bitcoin proof of work, that kind of idea, and it was weird. I was sitting in. I remember Alex Sturck used to always get upset at the altcoins that would pre-mine their coin, because technically that means there's no work involved in generating those coins. There she is! The queen of crypto has arrived. Hello, Colleen. I was wondering if you were going to make it here today. Say hi to your husband for me. Yeah, you're like, what the hell did I just walk into? No, don't you feel your ears burning? Anyway, I'm just being silly. This conversation isn't going to be necessarily about fundamental analysis. This is going to simply be more along the lines of trade location. That's probably the big thing that I like about technical analysis. If you do pull up this kind of chart here, that probably one of the good things that might help you, if you're just like, I don't understand this growth of this network and how that factors into the equation, it actually often helps if you change the chart to a logarithmic chart. And on a logarithmic basis, growth now, you actually see that actually the growth of this asset isn't astronomical like that last chart showed you. That there is actually sort of a trajectory that this is moving on. And again, this actually speaks to two different types of analysis. I like the idea of the cost of production, trying to figure out where the sort of backbone of Bitcoin What does it take to keep the network going, i.e., validation of the blockchain, the ledger, i.e., the miners. I do understand that they're playing a smaller and smaller role in Bitcoin. I'm not quite sure exactly how that works, to be perfectly honest with you, but I do believe that if it's one thing that Bitcoin absolutely has to have, is they have to have the validation of the networks. And what is it going to take for those guys to keep working? And as I said earlier, it was a really interesting video I watched from another gentleman who actually said that the North American average cost of production is around $6,500, but the Chinese cost of production is around $3,500 or so, I think I heard him say. So I'm not quite sure how that's going to factor into Shane's scripting, but I keep talking fundamentals here, sorry. This is more of the kind of conversation, I think, along the lines of that stock to flow kind of conversation, and that's all this kind of idea. What is sort of natural logarithmic growth rates of assets that have a finite supply, but they keep growing in demand. And I'm not quite sure exactly who's right or wrong. I mean, I'm just another market participant, just Joe Schlub. But I will say that, and actually it looks like my log, because this is on log, sorry. Gotta change that back to a log scale. This was a study that was put forth, and again, I'm talking more fundamental. Sorry, guys, but this was a study that was put forth by, and I don't know exactly if it was his study or not, but there's a gentleman on Twitter, Phil Bitcoin sign. I don't know what his handle is, but he sort of first put this together, and I really like this kind of thinking. And as you can see, we're sort of down in that sort of value sort of line here. If this thesis is correct and it plays out, we probably should see some sort of bottom come in here. But that in itself isn't a guarantee. I mean, I was actually quite shocked, I guess a couple weeks ago, when we did come down and basically tagged that level and just violently reversed right off it. So I wonder how many people are following Phil B's chart here and took that trade just because the damn yellow line was tagged. I mean, that was remarkable, I have to say. And you never know. I mean, maybe we come back down here. Candle body lows like to be tested, blah, blah, blah. Maybe test into this wick here a bit, tag the line again, and reverse back up. I mean, you don't know. This crazy market will do any old damn thing it wants. So that was kind of a really interesting event. I was quite shocked to see that. Then there's another gentleman again, Google. I think I've put the link in these videos. I can't remember or not, but he was actually doing some actual logarithmic and somebody in a recent video said on Stamp I can't get the data going way back when, so they were like, well, use this symbol BLX. So thank you very much, YouTube audience. People were and people in the Hangout and on TRI. So people were at least try to help me because I did put that question forth and you guys did step forward. So that was totally awesome. But there's a gentleman, and if somebody has the guy's links, really nice gentleman, and he was producing these kind of logarithmic scale growth charts off of, I don't know whether his data was this BLX, but at least I can now see back into that 2010 low. So that was kind of cool. But at the same time too, it was like, oh crap, well, we're not actually at that yellow line yet. Oh geez. So I'm going to be watching these two studies back and forth very closely here. I think on balance, the message that I would actually prefer people sort of take away from all of this is we're not really in that fluffy zone. And that's really, what I've noticed in this world is most of the time, assets just sort of bump along. Bumpity, bumpity, bump. We say markets range 70 to 80% of the time, that kind of stuff. Then we go into really sort of weird phases where just like sort of a 2 or 3 year window, all hell breaks loose. And And of course, if it's into what I would perceive as a massive sort of cycle peak, this idea of the demographic shift from the baby boomers to the millennials, you often get these moves that are just absolutely insane. Was that whole crypto experience into 2017, 2018 sort of that expression of that? I do believe so. And I think we're sort of going back into the world of, okay, just, let's all just calm down. And it's painful and it's slow and but the point here is you can do yourself a huge favor if you just simply avoid trying to get sucked into the buy side on these euphoric peaks. Now, easier said than done. I'm not saying this is easy, don't get me wrong. And that's sort of where I wanted to go with sort of this whole conversation with you guys today was, I like the idea as sort of a rational analyst that we sort of play connect, especially when it comes to an asset like a commodity and something like Bitcoin. If we can start sort of connecting fundamental valuation, i.e. in this case cost of production, that stock to flow kind of thinking, and things like, and then here, thinking like technical analysis, because I actually think that they're actually extremely connected. It's not an accident you see technical bottoms come in like we saw through the winter last year. Now, was this actually a perfect logarithmic tag? I don't know. But I believe that we did a lot of work on the site, and we had a pretty good sort of feeling that sort of a very base cost of production was about $2,600. So it didn't really surprise me that the bottom did come in here around $3,000. And then if, like I said, stock to flow kind of thinking, it made sense based on these sort of logarithmic conversations. So what I really, and that's this whole idea of these green boxes, but often when I do these videos, they're already done up, and I actually have people say, okay, well, Brian, I wouldn't mind you just going from like a completely blank chart, like, okay, there it is, to how do you actually do this, right? And that's sort of what I wanted to do here today. Wow, that sure was long-winded. If you guys have a question, of course, feel free to ask. Let's see. And for whatever it's worth, why I didn't make reference to this, the school program, actually everybody's on hiatus. So this is actually, I think it's a good idea to plan it around the Christmas break, that we all just, everybody's off doing exams, and most people have finished exams and stuff. So there isn't any active class right now, so I haven't made reference to that today, if you're wondering why I didn't. And for whatever it's worth, I think our new school term starts up in the middle of January or something like that. So, take the time over the next couple of weeks if you feel like going down that road. You're more than welcome to consider joining us. But back to the conversation at hand. So I'm looking at this crazy Bitcoin price, and there's such a handy little tool, right? That just simply, like I said there just a minute ago, if you can just avoid coming in and buying even through this period here, just buying the top, then, and even if you bought anywhere else along here, ironically enough, if you just avoided buying at this top, you could have bought here and been like, okay, well, maybe that wasn't the best idea. I'll just walk away at scratch a year later. But it's not like you're coming in and FOMO buying. Now, I'll leave the conversation about crypto investing and Bitcoin at that. I mean, there was a huge trap laid here, which really sucks, where all the altcoins, of course, all went crazy into this. And a lot of people bought their Bitcoin here and then got sucked into buying altcoins that went off the board with those invested dollars. That's another conversation altogether. But, just on balance, if you're just watching this as somebody who's never seen this before, our sort of big premise here is we want to avoid coming in at the tops of markets. And unfortunately, this is when everybody, of course, is the most euphoric. It's when they're most excited. So when, if you go to cocktail parties and somebody says, "Are you long?" right? You want to say, "Oh yeah, of course I'm long. Yeah, I'm making killer bucks." And unfortunately also too, this is like capitalism 101, by definition, we know that the public buys up markets. So that means, the guys who make money, they buy down markets. And unfortunately, into that buying of down markets, the public is often selling. So, you should just be able to look at this chart and know exactly where the public was buying. And it sucks. It's a brutal, reality face slap about capitalism. But if it's one thing that, TRI, and I think that I've done a service to that, is just to try and encourage people to slow down a little bit. And one of the ways, and that's sort of where I wanted to go with all this today, one of the ways that you can slow yourself down is using a tool that just simply measures the range of whatever the price action has been. And you just simply say, look, I'm not allowed to buy until I get down into that bottom part of the range. So, there's a number of ways you can do it. You can, sort of manually, you can go in here and you can take things like price range tool and just sort of take the bottom end of the range and drag it up there. And then go the opposite direction and say, okay, well, there is the move. Holy crap, that's ridiculous. Now I'd like to see, at the very least, I want to see the market at least, take back half of that move. So, half of that move is somewhere around there, 50% rule. I'm just eyeballing this, right? All the nitpickers are way, no, it's not 50. Well, you get the idea, right? So you can just simply say, look, the market's going crazy, but I got to force myself that I'm not allowed to buy unless half of this has corrected. And there's a very famous technician by the name of, what was his full name? I know his second name is Dilbert. I want to say William, but I don't think that's right. Anyway, if anybody's watching and knows just off the top of their head, they can correct me. But anyway, we all call him WD Gann, right? Who basically said that, this is your bread and butter, right? By nature, this should happen. And ironically enough, through all of his studies, we actually find out that the market should retrace 50% of this move, ironically enough, in just about exactly 50% and it's tough on Bitcoin because where do you mark the bottom? But in essence, this 50% retracement should happen in about 50% of whatever this move was, right? Maybe we go, what? I just eyeballed that, so what's that about? I guess about 360 or something, right? Something like that is 50%. And lo and behold, in fact, actually did it quite a bit faster than that distance. It's interesting how, just eyeballing this particular range, why I picked that, I don't know. But we've actually done a lot of sort of these 50% retracement studies, and it's quite shocking when you look at Bitcoin because, this was almost exactly 1 year. And it's fascinating how sort of if we apply that same logic going the other direction, 50%. Actually, I don't want that tool. I want this one. If we go, I guess we'll have to go. Hello. Ding dong. Somebody's coming for dinner. I guess something like that. I don't know whether this will work or not, but I'm just having fun here. 50%. Come on, you. No, I don't think that's going to work. Oh, well. If we just eyeball this, you get the idea. 50%, right? So 50% up, 50%, whole move up, 50% down. Should have happened in about 50%. Turns out it actually took a whole year. So you should be able to do the same logic from wherever the bottom was back up to the top, 50% of that. probably should happen at about 50% of this time. And interestingly enough, considering this was almost exactly 1 year, it was quite surprising actually to see how pretty darn close that was to almost exactly 50% of that. So it was kind of amusing through this summer after this big rally up top here. I had just sort of mused with the crypto public, and of course everybody hates when I do this, but I had just simply said, well, there's your big move. What is 50% of this? Something along those lines, right? And just said, well, maybe we ought to come back down into here. And gee whiz, it was in about 50% of this time. So it's quite actually remarkable to watch the compression, and we just keep hitting these 50% rolls after 50% rolls after 50% rolls. But the bottom line message I was trying to get at with all of this was just simply, you want to do yourself a favor. This is one of the first one of the first tools that I learned back in the 1980s, the 50% rule. So often, if you get a move, you should expect a 50% retracement. Now, sometimes, like Bitcoin, a lot of crypto, they'll move far, far beyond 50%. But we get into trouble when we actually want to try and calculate things like 61.8%. With this drawing tool, dragging it down is fairly easy, but just doing it on the fly very quickly, it gets kind of difficult. And this is where we start getting into sort of mathematics of the market. WD Gann, very simple look at the world, this sort of natural 50% rule. But it turns out that actually nature moves in a very sort of, like a spiral fashion. And this whole idea of geometric progression. And actually there's some theories that the whole universe is built on triangles. So mathematicians a long time ago, and actually if I understand it correctly, it actually first came from Persia, starting to talk about things like the Fibonacci sequence. Fibonacci borrowed it from the Persians, and that sort of idea took hold in sort of Western society, where you could actually draw sort of ranges of movement, and mathematically you see very interesting things happen in nature. And this the big one that I've seen in my career that jumps out is this 0.618, and an extension. This is a retracement, but an extension of this range, 1.618, is called the golden ratio. So super, super important number in mathematics. And what I've often found, and I don't know whether it's sort of the horse leads the cart or the cart leads the horse, but what I found happens in technical analysis a lot is it sort of becomes like a self-fulfilling prophecy. So many people are following this particular level because they believe there's some sort of mathematical relationship because of the level. And then it becomes, well, is the level respected because the traders are trading it, or is it level respected because of, the Fibonacci sequence, golden ratio, yada, yada, yada. And in a weird sort of way, that's the same sort of thing with trend lines. Whenever you see trend lines tagged in the market, is it because the trend line itself visually demonstrates a rising supply or falling supply and demand equation? Or is it that so many people put the trend line on the chart, it's relatively easy to draw, everybody's seeing it, everybody sees the same level, and then you come into that level and all hell breaks loose. So that's a funny conversation about what role do humans play in this universe. Are they nothing more than a natural expression of the universe? And then that gets into the whole sort of, are we in control of our own destinies, or are we just part of a cog in a wheel, blah, 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 blah. Some people really don't like that kind of conversations. I talk about things like planetary relationships and the effects they have on the humans, and that gets really screwy. And unfortunately, that's one reason why people don't really like W.D. Gann, is because he went down that rabbit hole in a time when people really couldn't handle that kind of conversation. You might get burned at the stake in Lufkin, Texas. So, that's an interesting conversation unto itself. But the point of the matter here is this is a handy tool, and hopefully you saw how I did that, where it's called Fibonacci retracements, and you just grab it and you put the zero line at whatever the extreme of the move is. So this is a big blast off up. And we're going to draw the zero line off of that. And then we're just going to take the other end, which is the one line, and we're just going to drag that back to wherever the base of whatever the move is. With Bitcoin, it could be debatable. Do you draw this base off of the Mike Hearn rage quit lows? Or do you just say, screw it, I'm going to go off of zero because the difference statistically isn't that much? That's up to you. But what you should see here, and this is, Brian, he loves these levels, but remember I said earlier, 0.618 is a huge level for the mathematicians, and what I've often found is that a lot of the pit traders, they respect that level so much so that old pit traders that I used to work with, that was their nicknames, right? Well, that wasn't their nicknames, but I labeled this level off of their nicknames, their chat names in the trading pits, just because I knew by definition this guy was going to trade this level as soon as it was going to get hit. And as soon as it was hit, and he'd report, yep, I'm long, I'm short. It's just like so cliche. So it's a level that we have to understand. And what's really cool is in our level 3 course, we talk about the DOM. And, there's a lot of subtleties around the DOM, so you have to be really careful around it. But one session that I recorded in the crude oil pits, you can literally see the DOM just go nutso right around the 61.8 tag. And it's because all the algorithms all start coming alive because everybody knows that this is a level that people respect in the market, blah, blah, blah. So, like I said, is it the tail that wags the dog, or is it the dog that wags the tail? And what's really cool is you can actually see, like, algos that come alive only when other algos come alive. And you can literally see them fighting on the DOM back and forth. It's remarkable. So, really good lesson about 0.618. Like I said, I think we start off our conversation with 50% rules. It's the bread and butter of the universe. It's the level that we recommend for level 1 students to use to take profits, because naturally the market wants to come back to 50% rules. Once we're beyond this, now you don't have to worry that, hey, I'm walking into a trap and, this is the fluff and I'm going to be the bag holders, right? If you're long from anywhere down here, ironically enough, on this counter trend rally, like I said, it actually afforded you the opportunity to make money on your trade. But if we want to start thinking institutionally, then, like I said, the first number that jumps out once we zip past that 50% rule is that 61.8. And on the site and in my public videos, you've probably seen me make reference that we call him the Mountain Man level. And it's interesting, as we were stabbing into this Mountain Man level, does anybody remember who was the big public figure that sort of came and saved Bitcoin through this, right through here? Not really saved it, but he kind of was the first public figure to actually make a positive case publicly in the face of the U.S. government. Nobody? Anyway. William. Is his name, first name William Joshua? I didn't think it was. Anyway. Daff. As if. Oh, God. No, it was, what was his name? Giancarlo? I think that's what his name was. Yeah, Bitcoin Dad. Way to go, Rucker. CFTC commissioner, right? So it is interesting to see that if anybody had bought Mountain Man level and bought into those panic dumps, ironically enough, yeah, they had to go through a bunch of pain. But actually within short order, they were actually in the money. And ironically enough, that was right around 6,000 low. But ironically enough, they actually could have turned a double on their money if they just waited a year. I mean, that's how volatile this crazy space is. But anyway, so the point of the matter here is I like to use 0.618 as sort of like, okay, that's the start of, we're no longer in fluff land. The problem with this asset, of course, is it's so high priced that even if you bought in here and you went through the, the final capitulation dump, that represented like a 50% loss to people, right? And that I can understand. It's extremely painful. I mean, this is an insanely volatile asset. So, I like to use this 78.6. Now, as sort of my next sort of big institutional level that I like to follow. Again, a lot of these, in our level 3 program, we introduce the community to harmonic trading, and the whole idea that there is sort of a very harmonic behavioral pattern to consolidations, tops, bottoms, and you can actually draw the harmonics off of these fib levels. And one level that's respected highly in the harmonic community is this 0.786. You can also too, and I've had a lot of students in the past, also because this is venture capital, it makes complete sense to me. You could also consider like a complete retracer like 88.6, and we used to actually, through that last cycle, we kind of affectionately, there's bright lights. Let's get rid of that. There we are. We actually called this sort of like the normal, like, because remember I was trading crude oil years ago. A guy like Mountain Man, he trades crude. He's not in this. In fact, when I told these people I was going to crypto to do what I was doing, they were all like, "You're crazy, man." But nonetheless, he who laughs last laughs the hardest, or something along those lines. I actually like the idea of site people, and I have seen a lot of site people do this. Go, well, in crypto and in venture capital, especially like venture cap stocks, they act exactly the same way. I'm going to create a, we'll call this a crypto reload zone. Totally fine by me. That's a big shout out to Ian. I don't know whether Ian still watches my videos or not, but he was a really, really big fan of 88.6. But, these are, interestingly enough, these are your, Fibonacci levels. A lot of sort of harmonic patterns set up off of these. Is it sort of the tail wags the dog wags the tail? I don't know, but the long and short of it is we often see markets pivot off of these levels. What I see, and the reason why I like to use the 78.6, is what I often see, and I like to call this the line in the sand, where what I often see is if a market is still a bull market, and here's the problem that I have with a lot of people that participated in crypto is the market clearly told them that their coin wasn't in a bull market anymore and continued to work lower. Which unfortunately, is a brutal fact of venture capital. But if the market is still a bull market, then what I've found is that, like I said, I like to call this the line in the sand or the lits. What I often find is that you'll actually see W's develop right off of this level, exactly like this. I mean, it's quite shocking. So, the way I like to sort of suggest to people is, first and foremost, use tools like things like fibs. And in this case, I just gave you a nice little walkthrough of how I would sort of use that to hunt acceptable trade location. As sort of keep you out of FOMO buying. And this obviously is in hindsight, right? So it's pretty easy to look at something like this in hindsight and go, oh, yeah, that makes sense. Oh, yeah, I would have totally bought that, But now, if anything, what you need to do is you need to sort of practice and just go grab a coin that happens to be rallying right now. And I don't know if anybody's got one in particular to look at. I noticed this little Stratus, Kevin Kavarkanator, he was getting all excited about this thing recently. So nice pick there, Kevin. But here's a good example. This just happens to be an altcoin. Same basic premise is that, it looks like we have a bottom end of a range. So if I did want to buy, I'm just going to take my tool and draw my 61.8 to 78.6s, and voila, there you have sort of a potential buying zone. So, that's sort of looking at it in real time. Okay, this thing's clearly moving up, but I can't chase, right? And I've got to have the patience and discipline just to let the market come back down into reload zones. So there's a really cool one here recently I've been squawking about. Now, I'm not going to get into the whole exchange issues. Clearly understand, if you are playing this cryptocurrency game, like a gentleman who was with us at TRI since, and actually, I think he literally came into crypto right into that peak, and he had to go through a lot of pain on Trex because of all their delistings. I'm not going to comment on the exchanges themselves. I mean, that's a whole issue unto itself. It's interesting how a lot of our community has moved away or towards these decentralized exchanges. So, maybe that's the solution. But not going to really comment on that. But this is a really good example of just, can you guys see how this particular coin, try not to chase, draw your reload zones, all right. And in this particular case, I thought this was so cool because I wanted to see a W. So this guy, he rallied back up into here, then came back down, another reload zone. So technically we have a reload zone within a reload zone. And what's kind of freaky is I don't know whether you guys remember, but I drew this W on this chart back here and said, if I wanted to see a nice breakout and good trade location, this is what I want to see. That's getting a little scary. I can't believe that's actually happening exactly like that. But that's sort of that application of just waiting for a trade location. Once you're at trade location, then we'll go back to this conversation. This is really now, this gets into a conversation about how active you want to be as an investor. I like the idea of just, always giving yourself the ability to always add more to a trade. Never give yourself the ability that, I've bought all I can and I cannot even think about buying anymore because I'm going to break the 5% rule. Once you're in that position, then you're kind of handcuffed. So that's why it's a good idea, maybe go throw on like 1%, Maybe we start entering acceptable trade location. Okay, I can do 1%. Then maybe we see signs of divergence. Okay, well, I can add another percent. Or then we start seeing market structure come in. Okay, I can add another percent. Then we start seeing things like moving average, trend direction starting. Okay, well, I can add 1%. That's always a way to approach this. That's under the assumption, of course, that you're not trading on leverage. And really, you want to be an owner of these assets. I like the idea, kind of like what I did on that UBIC, of we have this big honkin' trade location, and of course, big rally here. There's no reason why you can't draw another reload zone. Let's see where that lines up. All right, so now we've got a situation. I love these because remember I'd said sort of earlier that I kind of think that the market actually, and actually our whole universe, I actually think it's built on triangles. There's some sort of crazy mathematical relationship. Any of the mathematicians watching this, have fun with this. But I've done these before where you, to try and figure out, because whenever I come on these kind of sites, they got all these tools, and, it's kind of like, okay, I want to figure out how you use each and every one of them. I know a good chunk of them, but there's still a few here that I don't know. But there is one cool kind of tool that we did for quite a while. It took a long time for me to figure out sort of the application of this fib spiral. And if I understand correctly, and keep in mind, I don't think I do yet, but I'm getting there. But I think it's something along the lines that this bottom part of the spiral has to intersect, and this top of the spiral has to intersect with the triangle, and then that actually gives you a roadmap for sort of the what a natural consolidation should look like, something along those lines. I did up a whole bunch of tweets and stuff, so you can go look through the Twitter feed. And there's a whole scale issues and all that, so I'm not going to get into too much detail there. But point of the matter is something along these lines. If this is all done correctly, it should something like that, look something like that, and then you can actually break this into triangles all the way down to infinity, and that'll tell you whether the scale's right. I just quickly eyeballed this, but point of the matter is that really I believe that all sort of consolidations are nothing more than just big triangles that ultimately resolve themselves. And Peter, you just did the level 1 course. Is there any sort of concept in our level, Peter's here, right? Yeah. In our level 1 course that kind of looks like that? Introduction to Technical Analysis? I mean, this is sort of the way the universe works, this whole idea of triangles. And what's really cool is sort of the visual expression of that triangle is really these Fibonacci retracement levels and where markets should naturally stop. There is what we like to call the reload short zone, right? 61.8 to 78.6. There's the long zone. And gee whiz, price is just going to bang around in between them. Don't know whether I've actually drawn this triangle correctly. It doesn't look like it. I think it needs to be probably a little longer than that. So that means that the spiral's a bit off. So I'm not going to get into all that today. But what I wanted to illustrate was that triangle type thinking. So that was kind of fun. Let's see. Where should we go next? All right. So I've drawn my reload zones. Now I've got a reload zone within a reload zone. Now here's the thing that kind of cheeky. Remember I had said earlier, quite often what you often. No, that sounds good. Quite often what I see is that the market actually loses the bottom of the reload zone and comes back and then recaptures it, and that's your bottom. And in actual fact, I think that's exactly what happened last cycle. Where the hell is it? How old is this? There we go. Nope, now I've gone way too far. What am I doing? Here we go. So, if we go zoop, and I don't know whether we want to go all the way to the bottom. I guess it doesn't matter. And we go reload zone. Come on, you. She's fighting me, Captain. All right. So notice it lost 78.6, then rallied back. Look at this W right in there. Nice little rally. Nice little FU against the lows. And away we go. And actually, you know what's the next sign of the next crypto bull market? Everybody's like, whoa. Nah, you know what? I'm done. Actually, I have to go to the bathroom. I'll talk to you guys later. I don't think anybody even picked up on that. And actually, it's quite remarkable how this almost always happens. But I don't know. Colleen, can you see this? You should be able to see this. Notice how the market comes down and bottoms, 78.6, all W's. But this is actually the sign of the new bull market. Right there. So do you see the consolidation? The breakout? Then it comes back down. It checks the breakout. And it says, no, I'm happy to head out. That's what you have to see out of Bitcoin for you to know that this is bottomed and the new bull has started. It's kind of weird, you know. So, as I had sort of said earlier, 78.6, fantastic level. And in this case, you know, that was that rage quit, Mike Hearn. Lots of back and forth. And this was actually the second Silk Road auction. And I don't know whether we ever found out who actually won that. This is the one that Tim Draper won way up here. Actually, I saw videos with him. He's still saying he wants... oh, thanks, Nick. All right. Anyway, so that's what you need to see for a bottom. You can see 78.6 resolution. So it's interesting how we came down. And the fascinating thing about this, and I've often wondered about this, is I remember when this breakout happened. I mean, it was quick and it was violent. Bang! And we never really came back down and actually checked this breakout in earnest. We put in this quite, tight little consolidation and continued straight up. So, Brian, look left, all that kind of crazy talk. This area here worries me immensely. I don't know. There's the original double bottom from last year. What's fascinating here is if I go like... just a simple trend line. There to there. And let's zoom that out. Boosh. Uh-oh. That's just the most simplest of trend lines. Ironically enough, that is our trend, believe it or not. And that's down here. Oh, Jesus, Brian, you're full of peaches and cream today. So, there are some levels for me to be thinking about right now. Not really a pretty picture, right? So as I said earlier, I mean, because we are in sort of that reload zone within reload zone here, believe it or not, I actually don't have a problem with little old ladies, nanny nibbles kind of idea, saying, you know what, I'm going to put myself on a dollar cost averaging plan. I'm now not buying into fluff. I had the patience and discipline. I've sat there and done absolutely nothing. And the irony of it all is you might have watched the whole damn bottom come in here and you're just like, okay, well, they broke it out. Okay, well, I'll wait for some sort of pullback and then give me W's and stuff. I mean, we could have probably done reload zones off all of these and stuff. Remember, 50% levels were into here, so people are taking profits off of buying that bottom. I think this got up to like 61.8 of the entire range. Big old M. Okay, now we're going to work our way back down. So, it took some time. Remember where there was that funny little liquidity trap right there? Oh boy, that was nasty. Never did hit 61.8. And I think that gave all these guys the ammunition they wanted. Now, this is actually an interesting conversation because, I think there was a concerted effort to put a bottom in this market. And then all of a sudden, in the face of that, look at this big old M that's just come in here. Bang, bang, bang. See you later. Right? And, good old Brian, M's and W's. What should we be expecting? The easy way for, the public to sort of think about this. Drive you crazy, but ironically enough, it's pretty often true. If you ever see the market smiling at you, like that, and the most important thing is the smile is confirmed right there. What's the market getting ready to do? Remember, the market's not friendly. Nobody ever said this market was friendly. Any market, for that matter. So, if the market's smiling at you, what should you get ready for? Sucks. It's brutal. I'm not quite sure why they don't teach this more to people. Anyway, nobody has an answer? Colleen loves it. Well, that's good. Run! Nobody on YouTube. 55 people watching. Well, that's not bad, actually, all things considered. Oh, 17 likes. All right, and everybody loves for me to do this, but everybody has to officially. There's 54 people there. If anybody has learned even the slightest thing here today that you've never seen before, I want to see you hit that like button, smash that subscribe button, ring Colleen's bell, right? Isn't that how it's supposed to go? Ring Colleen's bell. And actually, I'm going to, because I do have to pee, and I hate talking to you guys while I have to pee. So I'm going to give everybody the opportunity to smash that like button, ring that bell, right? And I'll be right back. We'll call this the intermission. Who's got the Henry Mancini? right. What's happened here? Everybody's gone. Hey, what happened? Who turned out the lights? 26? Oh, that's not bad. There you go. It's been a long time. All right, so anyway, I don't know where I was. Sorry to do that to everybody, but I I don't know whether you guys... My apartment's not that big, so, you know, maybe that you guys were privy to that. Hope not. If that's the case, that was incredibly rude of me. I apologize. All right, so long and short of it here, M's are never a good sign. Is there any real hurry here right now? Oh boy, not really. Boom, boom, boom. So for us to actually sort of, you know, finish that, and you know, this is what I'm worried about here. Notice, boom, boom, boom. Whoops, boom. Market heads lower and then V bottom. Woohoo! It's a new bull market! Man. Oh no! Here comes another M. Boom, ba 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 ba. Actually broke through that low. Oh no! So you could say, oh boy, there's a big happy face there. So, you know, until we actually start seeing W's, I don't think there's a huge hurry for any sort of higher time frame people. But like I said earlier, at the same time too, I love the idea of people that don't want to get into timing the market and just put themselves on a nice dollar cost averaging plan. We're now into a reload zone within a reload zone, so I don't have a problem with them nibbling away. Could you see the price here come off a couple grand over the next few months? Sure. Wouldn't surprise me. In fact, and actually, not a lot of people have sort of talked about this recently, but I remember there was one January 1st in particular where right out of the gate, and actually I guess you could argue, you know, January, well, we had a bit of a counter trend rally, so that wasn't too bad. But I remember one year, actually maybe it was, well, it went up a bit there and then down. I can't remember what year it was. I remember January right out of the gate, the damn market just broke. Maybe it was here. Yeah, actually it was the bottoming year. So here you can see January right out of the gate, dump, final capitulation low. That set the base. And I wonder, guys, what do you think? Are we kind of looking like that right now? Sure. Especially this kind of action there. Oh boy, that looks kind of familiar, eh? Look at that, eh? So, you know, if you fancy yourself a market timer and you're like, well, and if anything, Colleen, yeah, you're right. And what had to happen through that year, and this is what I'd really like to see, is Bitcoin's got to go sideways for a year, where a lot of people just sort of the base is in, but all the sort of moon boys and all that kind of stuff, they disappear. So, I mean, this is what I really think Bitcoin needs, is just a period of sideways. At or below reload zones, right? And then you start drawing your trend lines and breaks of trend lines. I mean, like, talk about nice, simple, we like to call it the Leanne James setup on the site, where you got, like, connect the dots, one high, two highs. You can see, obviously, that was pretty respected, all right? We've broken through the trend line. Now just give me a W on the other side of the trend line. And you notice that actually ended up coming in, like, way over here. And there, of course, is that breakout that I told you about. Well, I can't get that right now. I'll have to go to message. So, I'm not quite sure how, because I know I didn't go off there. Okay. So that's kind of what I want to see. Please, please, please. I suppose we could even make the argument like that high. And then if we go back to sort of today, and we go that high, now we can actually start seeing when the new trend's going to start. So the new trend, in my opinion, won't begin until this trend line is broken and a new W forms on the other side of it. We got a long way to go here, folks. I mean, let's call a spade a spade. Um, so, unfortunately, there's the Bitcoin price chart. Keep it simple. It's no rocket science. M's and W's. The cool part about Bitcoin is it's so algorithmic that I've been playing this silly game for like 4 or 5 years now. It is stunningly algorithmic. When we do see these bottoms come in, and actually, here's a really cool tool for you to consider. And actually, I put this on earlier. Boom. Here's 2 simple moving averages. One is the yearly moving average. So 1 year moving average. This is why I sort of think that Bitcoin's still a bull market. And you can see that, the market actually turned up through that 200 SMA after a nice long break back in 2015 time period. And then at the same time, too, this was the very first moment that we actually had 4 years of price data. Actually, it would be really cool. Let's, just for fun, where's that BLX? Let's do that on here. Let's see what we got. Okay, so, interesting. So with that extra data, this maroon line, or whatever the hell color it is, orange, it is the 200 period moving average, but on a weekly chart, or what's like the business cycle, or the 4 year moving average. And all I did was I just simply said, and my calculations might be off, I don't know. But I just simply said, what is 52 weeks times 7? Is that what I did? Times 4? 1,456. All right, well, we could always move that, change that. I think 50, yeah. What did I say, 56? Yeah. Okay, so interesting how even with this extra data, that line pretty much aligns where we had a nice little double bottom right through that window, back above the 200-day SMA, and we don't look back. So I kind of think I want to see sort of the same thing. Interesting how we got through into that moving average sandwich. Nice W, breakout, didn't look back. This is concerning. Because, like I said, for us to actually have that next sort of breakout, we actually want to see this sort of consolidation. And you can see we just had the 200 period moving average just roll over here right now. Now, notice the 200 period moving average when it acts here, right? I get a feeling that that's going to act as pretty good resistance going forward. So, that's 9,000. The interesting thing is we could dump, nicely here. And we sort of made a plan. This way, that 4 year moving average, that business cycle moving average. I love that idea as sort of value on Bitcoin right now. And notice that's sitting about 42, 40, what does that say? 4,800, just under $5,000. The original double bottom was, right in there. I love the idea of just like a nice dump, right, into those levels and then away. But what I do see happening, and I think this is the trade that Shane and Andrew and I are probably going to do here through the spring, is I'd actually like to try and get long from in here and actually play the bounce back up. And who can tell me what's the target that I'm probably going to use to look to take profits? I told you earlier. I don't know whether anybody even was listening or not. Thank you, Colleen. You're awesome. So Colleen says the 50% rule. So I don't know where the ultimate dump low is, but into the upcoming halving rally, this is the rally that I'm going to be looking to try and take profits on. So I don't know what that's going to look like. But as I said, 200 SMA, I got a funny feeling This is going to be a bit of a brick wall going forward, right? You see how long this thing takes to turn from down to up. It takes a long time. But at the same time, too, I absolutely love if you can try and sneak in off this sort of 4-year moving average cycle. And I think you've heard a lot of talking heads on like I said, not talking heads, that's the wrong term. The gentleman who put together the logarithmic scale study, it seems like a lot of people are like super jazzed about that. And I think he's been sort of saying that he's not really looking for the next big Bitcoin bull market until like 2021 or something like that. So, maybe we, and I'm just going to, wing this here, but maybe we do something along the lines like that. And then go, right? And then that breaks out that massive trend. Look at that. I just predicted the future. What do you think? My hunch is probably our future looks something along those lines. So we'll see how it goes. So be patient. If you are a cryptocurrency enthusiast, dollar cost average. Gotta tell you, there's a lot of really interesting little altcoins out there. Now you gotta understand, if you're gonna play in the altcoin market, some people give it a slightly different name. I won't say it on air here, but you gotta understand what you're getting into. I think it's a good idea, to be honest with you, and I just happen to have that UBIC chart on there. But I actually think it's a good idea, and I've been telling people on the site this constantly in our videos. I think it's actually a good idea to look at your asset versus things like dollar. And if setups start to develop, then so be it. Just go with it, right? And of course, if the setup fails versus dollar, back to fiat you go. So, here's a really good example of a chart that put in a really pretty looking W, and I just went and bought it, and we're just working away. There's nothing really to do here. And ironically enough, that's a big commentary of a quote-unquote trader's life. You put positions on, and you just let your money work. I have no idea what's going to happen there. I was actually really interested in this one because this is such a good example of what I'd love to see people who really want to trade alts and just kick ass and all that kind of shit, right? This is what I'd really like to see. And through that last cycle, we got to the point where we had a bunch of those traders. And then what I noticed is once the cycle was over, well, markets are not hot anymore. And I don't know whether anybody's ever watched, you YouTubers, any of you watched that Anthony Kroll video where he asks a guy, you fancy yourself a trader? Oh, what kind of trader are you? Kind of thing. And the guy goes, oh, I'm a Euro USD trader. And the guy looks at him, this Anthony Kroll guy, and basically openly insults him. In that, and I've seen it. I mean, it makes perfect sense. Once the altcoin market rolled over, a lot of our OGs that made a lot of money on altcoins, they just disappeared. Right? Bull market was over. But I am starting to see sort of the anecdotal evidence of this kind of market coming back. And it makes sense. It's been a couple of years. Market's completely washed out. I mean, the irony of it all is Brian really hasn't done much in the altcoin space over the past couple of years. I haven't blown myself up, but at the same time, too, I'm actually spending a lot of time trading things like penny stocks these days and options and stuff. But fingers crossed, maybe we're heading back into that type of market state. Who knows? But here's a really good example. This is basically that, same thing with Bitcoin. You could have done exactly the same thing with Bitcoin. Last winter, big rally, market doubles. You could sell half, get yourself a free position. And what I'm thinking now here is we're actually starting to get into a situation. I haven't seen this in a while in crypto, right? It's been a couple years. But we're actually coming down against lows, and the market is holding lows. So we actually have a situation here where, a daft trader would be like, all right, bang out big win. whether you get a free position or where you just, and you put the free coins on the side, you get your original money back and you're sitting there on your original capital waiting to attack again, or whether you just blew the whole damn thing out and you're just sitting on a bunch of money. But here we are. These coins are coming back down. Reload zones within reload zones. Same kind of conversation. And we might just fractal out here against the bottom end of the range. And you see what happened last time when we bottomed, and woohoo. The good part about this, too, is that we're coming into tax loss selling season. This is exactly when this stuff is supposed to be the weakest. Regardless of the people who are actually invested in these names because they believe in the names, etc., there are people that, quote-unquote, invest in these names, but unfortunately, in hindsight, especially if they're down quite a bit at the end of the year, they say, well, you know what, I've got a big gain over here, why don't you blow that thing out? And then that way it's a zero-sum game, there's no tax implications. So we do get a lot of that incentivized selling into the end of the year, and it's very normal. So in a weird sort of way, we have a situation here probably for the next week or so where these prices could remain artificially weak just based purely on tax reasons and nothing to do with the fundamentals of the actual stories themselves. So consider that too. And in the stock market, I'm doing a lot of tax loss buying right now. I'm buying into that seasonal weakness in the venture cap market. So, whether it be cryptocurrencies or whether it be things like stocks, it's the same capital gains and losses logic. So, here is yet another example. The trader's trader, if you will be down probably off of things like, I won't go any lower than a 4-hour for you guys. But maybe hunting W's down in here. I mean, hell, there's a cute little fight going on right there as we speak. Maybe even thinking about bots heading up top. It's interesting how these candles actually close lower than these. So, double bottom, W hunters. I think you're just slowly waiting. The interesting thing, again, I don't know whether it's a good idea to talk to you in the YouTube audience about sort of traders trade setups, but, I do see sort of same logic, exactly the same thing that I just talked to you guys about Bitcoin and higher time frames, no difference. So if we did want to hunt along off of these lows, we were thinking about taking profits, at the least, take partial profits. Stop to scratch on remaining, that kind of stuff. Notice that the 50% low of this range happens to line up with the block. And also off of this line. Not quite sure what that line is, though. I think that's an AB equals CD line. So, I'm not saying that this thing is a buy, but what I am saying is that I can completely understand traders starting to focus in off of things like lower time frames. So I am seeing, and sort of I noticed that one of our alumni, Da Vinci, and what a surprise, I think Da Vinci on balance is a crypto enthusiast. What do you think, guys? Does he like crypto at all? I don't know. But not surprised that he's sort of keeping the eye on the prize. I thought this was a tweet in reply. How the hell did I do that? Anyway, I know Dev did tweet something out, and then I just oh yeah, here it is. So he's and here's the crazy thing about the market, right? Is you should look at these kind of names and go, yep, the public. What do you think the public's doing? Do you think the public is at all interested at all in this stuff at all? I mean, maybe you got to sit on this for a while, right? But I'm seeing a lot more of this kind of stuff, right? And my response was, yeah, you know what? You can see the setups are setting up. Now, you just go blindly buy this. I can see the bullish divergence in MACD. I can see W's, and Willie got briefly stupid. I can see the W's in volume, and I can see people stepping in on the buy side. Brian, he's a cheap ass, so if I see a market like this, am I allowed to go and chase this up top here? Is Brian allowed to do that? And if you followed Brian at all, you know that Brian isn't allowed to do that. So what am I supposed to do? Right? Draw your reload zones exactly like I did just off of Bitcoin and all that. No difference. There's our algorithm guy, Mountain Man, sitting there. We know the algos are going to start coming alive. What a coincidence. That happens to correspond with the bottom of value against that level. Nice tail to be eaten down in there. And good old 78.6. Really, I might argue that this really all could be value, but nonetheless, you can see, are sellers really that interested in selling this asset down here? Actually, no. When price gets down into these levels, not much business was actually done here. So I get the impression that this is sort of the playground for this asset. And if I wanted to buy, I could either just go and throw some stink bids in down in this, sprinkle your orders, whatever. You can see the bigger W that's in there. I like that. That's this W. You could work an order right off the W level and just simply risk the W. Perfectly fine. But just don't chase. Right? Exactly the same logic that we talked about with that whole Bitcoin and how you want to avoid chasing. So, great to see that, this, and it's actually interesting. We're going to plan on doing a webinar coming up pretty soon, probably in the next couple months. And that was a message that I tried to convey to the gentleman who was actually considering helping us build this webinar, is the idea that what we teach here, ironically enough, is actually asset agnostic. That it doesn't really care what the asset is, because a lot of what we do as technicians is really actually just watching human behavior. And, where are they panic dumping? Where is the counter trend rally off of that? The next panic dump, did they dump harder or did they dump less hard? Do we get signs of momentum divergences on this action? Then do we actually see the supply and demand dynamic in the marketplace itself change through this concept called market structure? Then on big breakouts in one direction, what are some statistical levels that we can use that are just really nothing more than just natural retracements? Not quite sure where I was going with all that, but it sure sounded good, eh? All right. This was a bit of an overview. Hope you got some good value out of it. Just some nice basic concepts. I do like the idea of us, basically being on the other side of the crypto winter. I'm kind of thinking, we're in sort of deep thaw, sort of, we were in deep frost. We sort of came out of the freezer there a bit. Very simple, this is actually pretty normal. Buy when it snows, sell when it goes. We know the halvening's coming up, so on balance, looking for some sort of bottom here over the next month or so seems completely logical to me. I didn't want to reference this because I've been talking to you guys on the YouTube page at length about this for weeks, so I didn't want to go too much into this chart page. But we just had inside bars fail signals on all three of the big boys, so I don't think it's a huge hurry. Oh, it's the end of the world, right? Actually, I should back that up. I don't think it's a huge hurry, end of the world, I gotta go load up on my Bitcoins now because the bottom is in. That's the way that I would put it. And full disclosure, over the past 2 or 3 years, frankly speaking, I haven't bought any Bitcoin, but this is actually the first time when I'm actually starting to seriously think about buying Bitcoin, and doing so to build a Bitcoin stash to use to build a Deribit long options position heading into the halvening window. So that's sort of where I am right now. A couple site OGs and I are going to have some fun on Deribit. And I'm taking the opportunity now as price is coming down here to start accumulating. We just put ourselves on a dollar cost averaging plan. I don't know whether the dump has to happen into the end of December or whether it's into the beginning of January. I don't know. But I'm not, I don't really want to try and time this dump. It'll happen when it happens. And I'm just simply saying, look, let's just slowly go, and maybe once a week, once every couple of weeks, we're just going to go and buy an equal portion to start building that Bitcoin hoard. And when the bottom comes in, that's actually when I want to be able to pull the trigger on the calls, right, and start loading up on the calls. So we're taking the opportunity now to build the base for that plan, and I think it makes sense. So we'll see how it goes. Only time will tell. So over the next few months, I'm actually, let's say the next couple months, I'm actually rooting for lower prices here. And as I said, got inside bars firing here. Moving averages are all pointing down. I don't see any signs of W yet. So what's the big hurry? Show me a W? All right, and then we can start talking. But for now, there are no W's, so I'm not really in a big hurry. And the worst part about this, of course, guys, is that the message, hopefully, from Brian really hasn't changed a heck of a lot. And we just have to be patient and disciplined and just wait for the W's. And it could be a long, slow slog here, guys. Let's call a spade a spade. Okay, so, there's your summary. Hope you guys enjoyed that. Like I said, I actually think there are some really interesting little trades out there. Here's a really cool one we've been talking on the site recently. Nice little bullish bot setup on this Atom. And you can see it's moved, it's gone beyond move stop to trailing. So anybody who did take this, of course, they're just slowly locking in profits now. So you can't say there aren't ideas. There are trades out there. As I showed you, Algo ran. It's just doing its thing. I have no idea what's going to happen. It's a setup. It's just doing its thing. And I noticed, just as another example, this happens to be versus Bitcoin, but I noticed Stratus, people were talking about this, and look how it's breaking out now. And the irony of it all is, you guys tell me, is there any money to be made on these things? Any room at all for this thing to move up just slightly? And that's, ironically enough, the kind of market that we're in right now, so... Okay, guys, I think I'm going to leave it at that. I sure hope you enjoyed the presentation. If you have any questions, feel free to comment a question here on this video. We usually look at them and try and respond. And as I had said earlier, we're probably going to have our next intake for the Level 1 program, I think, is January. So if you are interested, feel free to give me a shout or any of the site peeps. We can always help you answer questions there as well. And have yourselves a great day. We'll see everybody on the Daily Brief recap first thing tomorrow morning. All right. Bye, guys. Well, I guess I'm supposed to say, and bye for now. Thank you, Khalid, for reminding me. Bye.